Hello legends, the price of Bitcoin is getting a major drop of several $1,000s in the last 24 hours, and today is the walk of shame, guys. Today is the day that I come up with the previous video and say that I was completely wrong with the prediction, looking at a higher low in the last few days to claim 120k plus, and this was wrong, guys, and I actually got into a long trade that got stopped out yesterday. So total transparency here, this does have to happen once in a while, okay? The predictions throughout the last couple of months and even last few weeks on levels and scenarios have been spot on. You can see it on the videos. We were looking for a breakout. This was back in June to hit all-time high. We also talked about rejections inside of this zone at 120k to revisit 115k. That's where we did get the bounce, okay, after that prediction, and looking for a rally. Of course, this did not hit all-time high, but we did get a significant bounce of several $1,000s. And now this prediction lately in the last couple of days did not play out, guys, okay? So, you know, need to say this. This is the walk of shame. You know, you need to come and give the explanations. I was very much aware of the price coming down to revisit the lows again. And in today's episode, we are discussing still why the probabilities are low that we actually get a successful breakdown from the lows of the range. I still maintain swing long positions and, you know, not too worried about this movement to the downside. And that has to do with this entire structure coming to the conclusion that it is close to impossible that we actually see, you know, some big impulsive moves to the downside and selling pressure with volume. CVD is very bullish, okay? You do have massive bullish CVD divergence, lots of shorts entering the market from the higher lows created the first week of July. And it just looks pretty good still for the bullish case scenario. Now, one reason that we are getting the drop here, we filled that CME gap. We just literally just filled it right now as we speak. So we did come down. We missed it by a hair. So another leg down to fill the gap was very much a possibility. And I do think that the low could be in, guys, in this area or very close and head up to $120,000. That's what I'm leaning on, and I will explain it throughout today's video update. The S&P 500 got a major move to the downside here, as you can see in the last 24 hours. Pretty aggressive drop, and this is also pulling back here the price of Bitcoin. Don't forget that on Bluffin Exchange, you do get 20% cash back, guys, on your initial deposit up to $500, and on weeks, you do get 20% cash back as well, but $30,000 and trading rewards, okay? The more you trade, the more rewards you're going to get, and also 25% fee reduction, guys, when you sign up with that link down below in the description. Bluffin or Weeks, great exchanges. You only need an email and a password to sign up. But let's go and do the analysis and go with a general idea. This range is very much reminding me of the range that we formed in 2024, where it looked extremely corrective. However, it was extending in time for several months, okay? This is the higher time frame on the 4-hourly, and we revisited the lows here, as you can see, and then finally got that major push to the upside. Sorry about the lag here, guys. Got too many things open. And it reminds me very much of, you know, 2024 price action. Very corrective, very overlappy. It's a hard time here to find a successful impulsive move to the downside, and we're still leaning with the general idea that this is a finished, okay, possible finished corrective structure right now, or very close to it, because we haven't hit the invalidation levels, and that we are still in bullish market structure, okay? We're still in bullish market structure from the last, you know, few months. And the last few weeks eventually does look very corrective. So what kind of corrections could be possible inside of this zone? Forming massive bullish CVD divergence. We have lots of shorts entering the market in the last 2 weeks, okay? Eventually the lows of the range is a good take profit zone, in my opinion, if you have been shorting the highs of the range. Bullish CVD divergence, lots of shorts entering, and the price forming higher lows still from the lows here of the first week of July, and big lower lows on the CVD. So what do we have to still lean on this scenario, on the bullish market structure? Well, let's just talk about the least probable scenario, which is the bearish case. I've been doing several hours of technical analysis, looking at Elliott wave counts here and different scenarios. Obviously, the data is bullish. The news is bullish. Well, lots of bullish news as well. S&P is dropping. Okay, that's fine. It's dragging the price down as well. And just with the analysis coming to the conclusion, that we are at the lows of the range and this price action looks extremely corrective. If I need to come with a bearish case, this has to be your leading move to the downside since the all-time high with an impulse. This wave 2 right over here is extremely long in time. It's over 5-6 times longer than your wave 1, which is very rare to see in a wave 2, right? If we're looking for impulsive moves down. You cannot count a proper impulsive move down from this level. And all of this is extremely long in time as well. Very choppy, very overlappy. So it does look like that all of this is part of big 3-wave corrective structures. And the only scenario that I do see as the bearish case, which would eventually be breaking down in a wave 3 to get below $103,000, $110,000, sorry, is looking at this as a wave 1, large WXY here with a flat in your Y wave. And then here you have an expanding diagonal in your wave 1, wave 2 with a bounce of yesterday. And you're in the formation of a wave 3, which you could be forming your wave 1, another wave 2, and then 3, 4, 5. You actually break down and we start collapsing down, right? This is why we need to manage risk eventually with the possible outcome. Low probability. I'm still leaning on this throughout the last few weeks, and I still stick here that it is low probable. Okay, the probabilities are low to break down successfully from the lows of the range, just because of the massive overlap that we have throughout the waves here. The bearish case scenario does not look symmetrical at all. Wave 2 being 5-6 times longer than your wave 1 in time. You cannot count any other, proper impulsive moves down here. This is a 3-wave structure right over there. There's no proper impulsive moves to the downside, which brings me to the conclusion of the other different scenarios now that we formed another low. Well, eventually there is the triple zigzag scenario, right? Or the WXYXZ, basically a sideways here corrective move, which is what makes more sense. Of course, there's this one right over here, okay, or there's this one, right, which kind of fits a little bit better and more symmetrical. It's packed of 3-wave structure. This wave can be counted as a double zigzag, where you have a zigzag here, okay, to the upside, your correction here, sideways momentum, and another zigzag right over here. We were looking at this to be more of an impulse. It did count better as an impulsive move to the upside, I have to say. But a double zigzag is very much possible for the count, which is possible inside of your wave X of a WXY or a WXYXZ. So this is what we are dealing with at the moment. And we do have a kind of a nice zigzag move down since the highs created on Monday, okay? It does look pretty nice, and the low could be in or very close to being in now that we finally filled that CME futures gap as well, which we just filled here in the as I was recording this, okay? We just got that leg down and getting the bounce now. And, what is very interesting about this movement to the downside is that you have that expanding diagonal to the downside right over here, which is a rare pattern, even though your wave 4 is just almost the same as your wave 2. I've been checking other exchanges, an expanding diagonal here to the downside. It's just, it is a rare movement, okay? You don't see them very often, but you would have to lean on an expanding diagonal here, very much possible. On some exchanges, the wave 4 was actually longer than your wave 2 by just a hair. So we need to give it, the option here for the expanding diagonal, which is forming your wave A, your wave B here, and now we move down in an impulsive move, right? We do have a 1, 2, 3, 4, 5. If you're forming a 4, 5 right now, it could be getting choppy and ready for the reversal, as the probabilities of breaking down successfully from the lows of the range are very low, guys. Like I said, throughout the last couple of weeks, breaking down from this low is highly unlikely. Breaking down from this low is, successfully is highly unlikely. It doesn't mean we can revisit it, okay, which is what is happening now throughout the last few hours. Reminding me very much of this range of 2024. Extremely corrective kind of price action, and we were leaning on the same scenario back in 2024. guys, I think it's unlikely. We were long in here the lows of the range, okay, and very much took advantage of longing the lows of the range here, realizing that this was, very much corrective kind of price action. So we revisited the lows, got a bounce. We got back down to the lows and, got the bounce. So eventually, after several weeks, finally getting that rally to break out from all-time high. So it's reminding me very much of that scenario, okay, where in the last few weeks, we were talking about low probability in breaking down from the lows, which does not mean we can revisit the lows, okay, which is currently what's happening right now, which is coming, making me come to this conclusion, right? When I'm looking at bearish case scenarios in the last few hours, it just doesn't look good. It does not look good at all. I'm trying to find impulsive moves. Volume as well as low to the downside. And it just doesn't fit properly to look at the big breakdown, which would be this one. Okay. And as your wave 2 is extremely long in time from your wave 1, you just have to give it the lowest probability, especially taking into consideration the overall macro trend, which is still bullish, and realizing that this still looks very corrective. So the WXYXZ fits in very, very nicely looking at the latest move, okay, in this zone. That the low could be in at the 114K level, 113K zone could be revisited if we form one more lower high and take out the low. It is very much a possibility. What I do like about this count, as explained, is that we do have an expanding diagonal possibility, your wave B, and now an impulsive move. So you've got an ABC, which was finishing your wave Z here, which looks very, very good. You're getting choppy right now at the lows of the range, which is what we want to see for that possible, proof of support and the reversal coming in the next coming hours and next coming days. Another scenario would be this one. Okay, been doing some, different counts early this morning, really trying to look for the bearish case, looking for an impulsive move down, which is only this one right over here, which doesn't look good at all. And then looking at this one, which is also very much a possibility, counting this zigzag down, okay, regardless, it doesn't really matter. You can count an impulsive move with this wave to the downside. And also with this latest one right over here, there is a kind of a small little 5-wave structure, meaning that this is an A wave, a B wave, and a triangle, which, you do have lower high, higher low, lower high, higher low. That's one scenario that is possible to form that zigzag in your W, your double zigzag here in your wave X, and right now just a normal zigzag down with your A wave being an expanding diagonal, your B wave being very quick and sharp, and then another impulsive move down in a 1, 2, 3, 4, 5. We're forming your 4, 5 right now to potentially get that reversal in the next coming hours. So still low probability, okay, leaning with the scenarios from the last 2 weeks that a breakdown from the lows of the range is still unlikely, which makes it very interesting for some longs. I am still swing long here on the price of Bitcoin on multiple exchanges, not too worried still that we could get that breakdown. Invalidation, hard invalidation would be $112,000. 113 can be visited, but $112,000 is because you don't want to see that wave 4, okay, eventually get very close to your highs here and hit the golden pocket, which is very, very rare for a wave 4, okay? So 50% Fibonacci is doing the game right now, which is that general idea. Wave 4s, do get that bounce at the 382 or the 50% Fibonacci, right? When we do consider this finished, 4th wave potentially. So now it's the moment, right, of where the people are just in doubt, right? Are you in doubt? So there's this scenario, which is very possible, just a WXY. Okay, your triangle here inside of your B wave of your ABC of your wave W. One scenario possibly, or a WXYXZ is another scenario, which looks very interesting as well. The latest move down is just a nice zigzag, another 3-wave structure, right, which we need to put back, put inside of this book of the 3-wave structure development in this range. And I've been, in the last couple of hours before this video, trying to look for the bearish Elliott wave count, which is only this one right over here, which has low probability just because of the length of your wave 2 in this complex WXY, which just doesn't have the highest probability, unfortunately, right? So we need to go with the overall macro bullish trend and leaning that this counts much better as a corrective structure. Not much more has to be said, guys. Basically swing long. We do have, some interesting news eventually. We do have US crypto ETFs took in 12.8 billion in July, the highest ever, guys. So everything is still very, very bullish, as we can see on the macro. Michael Saylor says Strategy could buy as much as 1.5 million Bitcoin, which is over 5% of the supply. And they already have 3%, which is about over 600,000 Bitcoin, which is crazy. And the accumulation on institutions seems to continue. So I wouldn't be too worried about this shakeout. This scenario does remind me of 2024 kind of price action, very corrective, revisiting the lows consistently for many weeks and even months here. This is the higher time frame. And this does remind me of that scenario, but on the lower time frame, instead of months, a few weeks, okay, as you can see. And we're getting that beautiful reaction. So ultimately, we have bullish CVD divergence from the higher lows of July. And the charts do tell us, okay, that huge amount of liquidity, which is now, there's more liquidity to the upside than to the downside, above 120K eventually. So I do think that liquidity could be very much fetched in the next coming days. Maybe the weekend is not going to happen. So maybe by next week, okay, we start getting that, major recovery to get above 120K, or maybe today, Friday, right? We just get a massive bounce out of nowhere. But ultimately, the probabilities, okay, of breaking down successfully are still the lowest, purely based on this range and purely based on the macro range that is still bullish, guys, okay? So not much more has to be said. Thank you very much for joining. Remember that you do have those insane bonuses for the exchanges, Bluffin and Weeks, guys, where you do get 20% cash back, and you also get 25% fee cut on your Weeks exchange, guys, while you sign up to the link down below. Thank you very much for joining, and I will see you in the next one.